Dr. Shapiro, let me start with you because you've written papers on politics and the Federal Reserve. People make the point that the Federal Reserve is independent. It's not a political institution. Are they wrong?
Well, they're right and wrong. That is, the Fed's primary mission is to maintain the stability of markets and the conditions for either growth or economic recovery. But maintaining stable markets often entails responding to whatever is the political demand at the time. So, for example, right now, we have a very large jump in the deficit coming. And in fact, it's here. A jump of about 15%. In some way, the Fed has to accommodate that. Otherwise, there'll be significant market pressures on interest rates beyond what the Fed is looking for at interest rates. So it's, it's not a matter simply of taking orders from the political branch. They don't do that. But it is recognizing that the large decisions by the White House and the Congress create conditions which the Fed has to accommodate.
Dr. Shapiro, you have lived both in academics and in politics the deficit to GDP life of the last 2-3 decades, your service to Bill Clinton years ago, and of course your advice to other selected Democrats as well. If you move from the Clinton surplus to the other deficits to GDP that we have, what is the critical ratio for Chairman Powell? We're at 3, we're going to 4% GDP, et cetera. Do you have in your head a tip point where for Chairman Powell, deficit to GDP is important?
No, I don't think there really is a tip point. And the notion of the tip point really is consistent with a closed economy. We have such an open economy in terms of capital markets that it becomes much more complicated.
Okay, well, we have an open economy, I understand that, but also we've identified, Scarlet and I, in interviews this week, that the trade war is now really a trade war. That has to dampen economic growth, and then how does that change the Powell calculus next year?
Actually, my view is more pessimistic than I think a lot of your commentators recently. I think the Fed is looking at this economy and saying, we're in year 9 of an expansion. No expansion goes on forever. This one already shows significant signs of further slowdown. Existing home sales down 5 out of the last 6 months. New home sales down 9 out of the last 12 months. Net investment, even with the large tax incentives, growing pretty slowly, and in fact down 3 out of the last 6 months. There are, and perhaps most important, the yield curve. The yield curve has flattened very significantly. And so I think part of what's going on in the mind of the Fed is how do we get a soft landing, but also how do we have, when the recession comes, sufficient room to stimulate the economy, which entails moving interest rates up.
Robert Shapiro, we have a political election. We have a political change, as we saw in the drama yesterday. You served under Daniel Patrick Moynihan. You worked every day with Daniel Patrick Moynihan. That is the nostalgia the president wants. He wants to look back to the time of Tip O'Neill, Moynihan, and other selected Southern Republicans. That's not the reality now. What's the Democrat Party calculus right now you want to see into next year?
Well, what I would like to see the Democratic Party do is advance a serious agenda to address the ongoing income problem in this country. We also know that real wages, in fact, have been going down. And that's not a new phenomenon. It's been happening in most years of the last 15 years, in fact. The education problems, the problems in the healthcare system, they can't pass it. They can't pass any of it in this political context, but they can create a agenda that the public can respond to and show that they are really serious, as I think the Fed is, about the real fundamentals in the economy.